Hey, in this video, I'm going to share a bunch of tips to help you with your crypto taxes. So I paid for a consulting call with a crypto CPA in Canada, and I got to ask a bunch of questions that really helped me out with my crypto taxes. So I'm going to share all that knowledge with you. And I also just finished doing all my numbers and transactions on Coinly, and I ran into a lot of issues this year. So I just wanted to make a video with all the tips and things I wish I did differently. And if I knew this stuff, I think it would have saved me a lot of time, money, and stress. Because crypto taxes are super confusing. So hopefully this information is helpful. I'm not a professional or an accountant, so double check everything I say and enjoy the video. So quick background, this year I went deep into the crypto rabbit hole. Last year I only just held on to crypto, didn't do much trading, so my tax situation was very simple. There wasn't many transactions. This year was the complete opposite. I was doing like layer 2s, DeFi staking, interest, making commissions, getting paid in crypto, and I had thousands of transactions and over 20 wallets to track and upload. So it was a nightmare. Now these tips aren't really in any particular order, but let's just go through them one by one. So the first tip when it comes to crypto taxes is decide if you want to use like a software or hire a professional, or if you want to do it manually. Now this depends on how many transactions you have. If you have, let's say, like under 20, then it's relatively simple. You can handle that yourself. And generally the more transactions you have, the higher a professional is going to cost, the higher a software like Coinly, CoinTracker is going to cost. So in general, the more you have, the higher it's going to cost and the longer it's going to take as well. So if you have like 5, 10, 20 transactions, pretty simple. Once you start getting to like thousands, you definitely need a professional or a software. And a transaction isn't just buying or selling. If you transfer something, let's say you buy something on Binance and you transfer it to your hardware wallet, that counts as a transaction, just transferring something, and you have to keep track of all that stuff. Even though it's not a sale, you have to keep track of all of that. So that's why the transactions can add up really quickly. Even if you're not like a day trader, you can have a lot of transactions if you're just sending crypto around. So anyways, decide what you need. In most cases, I think a software is best for people, but it depends on your specific situation. Hey, so I'm editing and I wanted to add this one in, but the next tip is basically just to keep your transactions low, because the more transactions you have, the more expensive and complicated things are going to get and the more issues that are going to arise. So if you're buying, let's say $10 of Bitcoin every day as an example, you're going to have 365 transactions over the year. And if you're sending that to like a hardware wallet every day, then that's going to double the transactions there. And that's already like 365 times 2. Whereas if you just buy Bitcoin every month, for example, you're going to have 24 transactions if you're sending it to hardware wallet. This year, I spent a lot of time like just doing like $10, $50 transactions just to test blockchains, and it was good for like learning and exploring the ecosystem. What I didn't consider is it's going to make tracking everything very complicated, more time consuming, and more expensive. So just find that balance. Like if you're spending like $5 on something, make sure you're just recording it. You have a good record of like recording everything, or just do less transactions. Just do one big purchase every month and avoid all those little transactions. It'll make things easier. You can do it however you want. Just keep it in mind. The more transactions, the more issues you run into if you're not like keeping everything organized. So I wanted to throw that in there. One of the questions I asked are, what are just the common mistakes people make? He said he talked to lots of like crypto traders, crypto entrepreneurs, etc. So what are just common mistakes that they make when it comes to crypto taxes? And the main one is just people are not staying organized and they're losing their data and transactions. And I had an issue with that this year as well. So some exchanges only keep transaction history for like 3 months. I think AscendX, I had tons of issues like contacting customer support, so I couldn't get all of my transactions. And that makes it obviously very hard to calculate everything if you don't have your transactions. So just staying on top of that and downloading it every month or every quarter is something I'm going to do moving forward. And you want to make sure you have the data for all of the years that you've been doing your crypto. So definitely download your transaction history. The next tip related to staying organized, on most exchanges you can just go to your account settings and there's a button to export history. On some of them they only download deposit and withdrawals. So also when you download it, make sure you open the spreadsheet and check that it has trades, it has deposits, it has withdrawals, it has everything. Because when I uploaded it to Coinly, it was missing stuff and then I had to go back and I didn't know why it was missing. So that's another tip. When you download your transactions, make sure it has everything. The next tip is be careful with the APIs. So some exchanges let you use an API, which are convenient, and you can hook these up to your software like Coinly or CoinTracker, and then it just automatically pulls these transactions rather than you having to download a spreadsheet. But the APIs do the same thing. Sometimes they only track 1 year of data, then after a year it starts deleting those transactions and then it screws up all your numbers. So be careful with the APIs, check that those are correct. And even if you're using an API, make sure you also download the spreadsheets from your account, because it's very easy to lose those. And like I said, even Binance, they let you do like 5 reports a month and 3 months at a time. So, I ran out of reports for my Binance and then I had to wait a whole nother month to download the transactions. So just stay on top of it. Make sure you have all of your transaction history. That's a common mistake people make. The next tip is if you want your software to work, there's a bunch of different options. There's Coinly, there's CoinTracker. I forget the other names, but there's a bunch of options. For those to work, you need to upload every single transaction that you have. If you're missing one wallet or one transaction, your numbers for like capital gains will be higher, because if you sent it to a wallet, but it's not in the software, it'll just say you spent that money and then it'll count as a capital gain, right? So make sure you have every single transaction, you're not missing anything, so you get the accurate numbers. Now, another common mistake that he said is people don't claim their losses. This one was a little surprising to me, but I didn't even do it fully either. So if you have some coins and they dropped like 90% in value, or they're just down, you can claim those losses and it'll lower your capital gains. So as an example, let's say you made $100,000 on Bitcoin and you're getting taxed on that amount. You can offset that 100,000 if you've lost money on some other cryptos. Let's say you lost $10,000 on a meme coin. If you just sell it, then you could put that $10,000 against that $100,000 you made on Bitcoin. It's a great way to lower your tax bill. The next tip I have is just know how to prepare for your taxes. Like, what is the step-by-step to do it? I spent a lot of hours wasted just because I didn't have like a clear process I'm following, and I'm kind of just going everywhere, and that cost me like literally a lot of hours. So here's the step-by-step of what you have to do. The first step is make a list of everywhere you've transacted with your crypto. Make a list of all of your exchanges, all of your public wallets, so all of your different Ethereum addresses. Get that address, put it into a list. Binance Smart Chain, any blockchains that you've used, make a list of all of your wallets and label them. The next step after that is to download those transactions. So you have a list of your exchanges, your wallets, everything, staking, NFTs, whatever. Go to those platforms, download those transactions. Obviously, make sure you're getting all of the transaction history, like I said in the tip before. Make sure all the transactions are there. Download it. It's easiest with the public wallets. Like, you can just copy and paste your Ethereum wallet into Coinly, and it'll automatically pull those transactions because it's on the blockchain, which is an open ledger. The problems come with the exchanges, so make sure you download all the transactions. Step 3, upload it into your software. In this step, you might have to format and work with spreadsheets. I'll cover that in a later tip. Upload your transactions. Step 4, troubleshoot them. So you're going to want to make sure all the numbers add up, you're not missing anything. And step 5 is real simple. You just download your report and it'll show you all the numbers nicely and everything. So that's the step-by-step that I wish I knew. If I just followed that, like step 1, step 2, step 3, I would have saved a lot of hours, but I was kind of all over the place, not knowing what I was doing. So definitely use a step-by-step like that and have a process to save yourself time. The next tip is to be prepared to use Google Sheets. Now, if you're using a software like Coinly or any of them really, a lot of exchanges and blockchains are not compatible with that software, especially like new blockchains, new projects that are very small. So you have to like manually add these transactions through a spreadsheet. And that's why you might spend a lot of time on Google Sheets. And I had to learn just how to like use the filters. I was already familiar with Google Sheets, but this went to like the next level, like, because I had thousands of transactions. So just be ready to use Google Sheets, and you're gonna have to format it so you can upload it to Coinly, and it works with Coinly. And on their website, they have a template that you can download, and that's how they want you to fill out the columns. So get ready to use Google Sheets if you're on like an exchange that's not supported with these platforms. That leads me to the next tip. None of these softwares are perfect. I've tried 3 of them and they all had issues, and I had a lot of transactions. Last year, I only had a few transactions, so Coinly worked perfectly. This year, it was the complete opposite. I had a lot of errors, a lot of troubleshooting, and I tried the other softwares and those issues weren't going away. So just keep in mind, none of these softwares are perfect. They all have issues. To help you choose one, make sure you have your transactions ready. If you have that list of every exchange that you have in wallet, it's easy to just upload them to the software and test them out and see which ones are best. The other thing is just check what blockchains they support. If they support all of the projects that you used, you're gonna have a much easier time. So check what blockchains they support, and check if they support your country locally. So I'm in Canada. Coinly, it's compatible with CRA's guidelines, so that's why I used Coinly. Now, I wanted to use CoinTracker, and I really wanted CoinTracker to work because it had such a nice user interface, but it calculated my transactions very wrong, especially compared to Coinly. So I just couldn't even use it, even though I loved the user interface and stuff like that. So just keep that in mind. None of these softwares are perfect, and you'll likely run into issues if you have a lot of transactions, regardless of the software that you use. The next tip is consider business income versus capital gains. Now, I'm in Canada, so I don't know how this works in other parts of the world, but capital gains is basically you buy Bitcoin, 50K, it goes up to 100K, and let's say you sell it, you have $50,000 profit. On capital gains, you'll be taxed on $25,000 of that $50,000, so 50% of it. But if it's business income, you're taxed on the entire $50,000 profit, not 50% of it. And the difference is if you're a day trader, that's considered business income because that is your profession. You're trading every day, you're in and out. It's capital gains if you're just kind of holding. That's what I did last year. I was just holding. I didn't trade, just buy once, never sell. So that's capital gains. This year, I have a crypto business. I'm getting paid crypto income, crypto YouTube channel. So it's obviously business income. It'd be hard to argue the other way. And what the CPA said is the CRA will look at it as one big picture. You can't really divide like, oh, 50% is business income, 50% is capital gains. It's all just one thing. And you could risk it and try to like say it's capital gains, but generally they look at it at one big picture and you have to decide, are you paying business income or capital gains? That leads into the next tip, which is the structure. So if you're a day trader, it might make sense to incorporate, and this isn't going to apply to everybody, but if you incorporate a business, whether it's crypto or not, you pay a lower tax rate. So I don't know what the exact number is, but it's around like 75 grand to 100 grand. That's when it makes financial sense to incorporate your business, because in Ontario, at least, the corporate tax rate is 15%, whereas the personal tax rate is like, I don't know exactly, but it's around like 20%. So if you make 100 grand profit with a corporation, you'll pay $15,000. Personally, you'd pay 20 grand. That's a $5,000 savings just for incorporating. And you could pay like $500,000 to incorporate your business. You save 4 grand just like that. So if you're a crypto day trader or whatever, and you're making like 6 figures, consider incorporating. There is more complexity. You'll have to file 2 tax reports every year, one personally and one for your corporation. So there is more expenses and stuff like that. But in general, you save more money. And think about the structure if you're a trader. Now, the next one is just rapid fire questions. How are NFTs taxed? Basically, they're taxed the same way as a cryptocurrency. If you buy an NFT for 100, you sell it at 200, you pay $100 capital gains tax pretty much. Now it gets more complicated if you're minting NFTs. And I didn't go too deep down that rabbit hole, but if you're minting them, there's the question like, is it a transaction fee or is the fee for minting like the investment fee? So that's where it gets more complex. But in general, if you're just buying and trading on like OpenSea, you're not minting, it's just the same as a cryptocurrency. If it goes up in value and you sell it, that's what you're taxed on. I asked, can you write off Ethereum gas fees? So obviously on Ethereum, the fees can be like 50, 100, 150 bucks, but those are transaction fees, which can be written off. And that means like any withdrawal fees, trading fees on your crypto exchange can be written off. And also if you took out a loan and you're paying interest on that loan, that can be written off as well, as long as you're using that loan to generate income. So that's something I learned. Next question I asked is, what do you need to prep for your taxes? I went over this earlier. You want to make a list of all of your crypto transactions and exchanges that you've used and wallets. The other thing that you need is to get a summary of your holdings on the last day of the year. So December 31st, make a list of all of your holdings. You have 1 Bitcoin, you have 1 Ethereum, etc., etc. Make a list of that, and that'll be easier when you're calculating everything and all your numbers at the end. So I kind of ran through this. Hopefully this video was helpful. Main takeaways I took from this year, doing thousands of transactions. So the main overall tips, yeah, stay organized, download your transactions, do not lose them. Understand that the softwares are not perfect and you're gonna have to troubleshoot them. And then at a certain point, decide if you wanna hire a professional or if you wanna use software, especially if you're getting to like staking and all this complex stuff. Like next year, I'll probably need to go down the professional route. Those are the main things I learned. Hopefully there was some value in this video. This is stuff I wish I learned this year, and I spent ungodly amount of hours trying to sort out all these transactions. So hopefully this helps you. In the bottom of this video, I'll put a bunch of resources that are helpful. Check it out. Also, I think I have a discount for Coinly if you want to use that as well. So use the link. Thank you for watching. I'll see you in the next one.